commenting for us. So-called unicorns. These are private companies or startups that have become worth $1 billion or more. They're having such a run. There are dozens of them now. But could the good times soon come to a standstill for many of these names? As venture capital, that's the initial sugar daddies of many of these firms who put in early money, as they seek a return on their investment, these unicorns, rarely seen, are faced with two choices: diving into the often rough waters of an IPO or being acquired by a bigger or more established company. Which of these unicorns will survive and which will be trampled? Aw, like the one in the Harry Potter movie. Joining me now, Avalon Ventures founder Kevin Kinsella, who has put early money into a few of these names that have done really well in the past. Welcome, Kevin.
Good. Thank you, Liz. Happy to be here.
This whole concept of unicorns has suddenly become, well, Fortune put a gorgeous unicorn on its cover and asks the same question. Are these startup companies on a clock that's ticking down? And we're talking not necessarily the Ubers, which have definitely shown real strength, but a lot of other names. Etsy has already announced it's going public. These names, are they being pushed too far too fast?
That sort of depends on each company. I'm actually happy that Etsy is going public because it will validate whether the value in the private market is going to be in the public market. And so we'll see what the investors say about that and the analysts. So sooner or later, venture capitalists have to get their money back when they make an investment, and there's only two ways to do that.
We could show you some unicorns in line for prime time. Uber, everybody talks about. Well, this one's worth billions and billions of dollars. Right. It's not that small. But the Pinterests of the world, that's also pretty significant. Many of these have been in existence under 10 years. I think Uber, 6 years, Airbnb, 7 years, Snapchat, 3 years, Pinterest, 5 years. Right. Do they all end up launching IPOs? Is that the better route, or to be acquired by a bigger company, as Instagram allowed itself to be?
I like an acquisition at a very...
Why?
Because you get cash and you're done, and you don't have to put up with quarterly earnings reports and the vagaries of the market. So I would much rather have a company acquired than go public.
The IPO market is tough. I mean, let's use Box as an example. Right. It's a very interesting company run by Aaron Levy. We think he's terrific, but they went public recently, right, and they have struggled. I believe they're down a certain percentage at this point. Right. We could show Box and see that. And they had one bad quarter. Right. He came on and didn't seem concerned, but shareholders live by that quarterly calendar. Right. Which is tougher, isn't it?
Yeah, that's the problem. I mean, I think they lost a quarter of their market cap by missing earnings.
Is that ridiculous? I mean, this is a valid company.
It's a valid company. Whether it's a valid valuation, that's for the market to determine.
So IPO or be acquired, you've actually experienced both.
Right.
Athena Neurosciences, these are your names. Onyx, right, Vertex, right, Synaptics. Synaptics is an interesting one. That's the one, folks, if you don't know, that allowed people on the original... Was it the tablet or the iPad?
iPhone.
The iPhone, where you can move and make it bigger. A
right,
brilliant company. Right. Those went public. You were early investors in all
right,
of those. They were already, you believe, to have gone IPO?
Oh, sure. I think I started Synaptics in '86, and it went public in 2000, so it had been around for 14 years at that point.
You invested in Zynga, though, early. You're out of it now.
Yeah.
Zynga had huge news yesterday. It is plummeting today. Zynga down 15% at one point today, right, because it's bringing back its founder, right, who was pushed out, pressured out. Right. What's going on there? That doesn't look like a company that was ready to be public. It only had Facebook as its biggest customer. And now you see this is a $2.37 stock.
Right. Well, we invested at somewhere between a $10 and $15 million pre-money valuation, and it ultimately went public, or had a private valuation upwards of $14 billion. Went public at about 10, it popped up, and then it's been trading down since then. Whether it's a smart idea to put Mark back in, that's, again, the market will determine that. I think he can certainly come up with hit games, which he did at the beginning. So to get them out of that $2 to $3 stock price range, it's probably a very interesting choice.
Well, you've had more hits than misses, so it's great to have you on here, Kevin.
Good.
Thank you so much.
It's nice to be here.
Kevin Kinsella, he's Avalon Ventures founder with a very solid track record of getting in with these unicorns and making some money. We've got the